let's talk about a sector that's not been doing well for quite some time, and even today, certain stocks from this pack are under pressure. I'm talking about the entire NBFC space because pull up a Chola Mandalam Investment and Finance, that's down 2.5%. You have Shriram Finance, that's deeply under pressure as well. Manappuram, Poonawalla, both of these not doing well. The Bajaj twins are also barely holding on to gains today. So, not looking very good for the entire NBFC pack, but this is just not a one off that we're seeing today. This is something that we have been seeing for quite some time now. So let's bring on board Shweta Daptardar, the Vice President, Lead Analyst, Diversified Financials at Elara Capital, to talk about what's been ailing this entire NBFC space. What are the reasons that these stocks have been tanking away in trade for the last couple of months, if you could say so. Shweta, thanks so much for joining us on the show. That's exactly my first question to you. Help us understand what has been ailing the entire NBFC space, because you have regulatory concerns coming in, you have some problem with the asset qualities, what we've been hearing, the MFI space is not looking very good. Bunch of reasons. So tell us exactly what's going wrong with these companies.
Thank you, Snehi. So, the genesis of the problem has been, you have to understand that the acceleration in retail credit pace. So, just to give you a data point, over the past 3 years, unsecured retail credit has grown at a whopping pace of 45% CAGR. We have seen MSME and microfinance loans growing at an accelerated pace over past 10 years, given the target of the government of financial inclusion. While the growth has picked up really well, we are now witnessing the NPA upcycle or the spike. The Like I said, the larger reasons attributable to this kind of issue on asset quality front is more to do with increased household indebtedness. If you look at the high inflation levels, high interest rate levels, and the stagnancy or steady state income streams of both the rural and semi-urban markets, larger part of gap has been seen in repayments vis-a-vis loan credit. So I think that's where the geniuses lie. And the second half of this particular fiscal will see a further slowdown in growth rates for NBFCs as we see recalibration of business models.
Okay, so that explains what's causing the pressure. But the next question is that pressure adequately priced by the stocks now or not? Because they have corrected quite substantially. Do you think the bulk of the problem is priced in?
Yes, so there is something really typical about NBFC stocks is when the valuations take a beating, it's definitely not the time to be quickly taking actions and figuring out whether this is the bottom fishing. Or when the stocks are expensive, it doesn't necessarily imply that you should knock it out of your portfolio. So coming back directly to your question, so yes, the NBFC valuations have corrected, but larger part of problem is still persist because see, if we even talk about microfinance cycle, the problem this time around is structural more than incidental. If we talk about credit cards and unsecured credit business, although we might see recoveries at the end of this current fiscal, larger part of the problem lies in a small ticket lending segment. So yes, the issues have been slightly persistent. We might see asset quality spike even in the second half of the year. So I think the sort of advice which we are providing to our investors at Elara is cherry picking is the key as far as NBFC stocks are concerned. So even though valuations are looking attractive, we are looking at key players which are diversified as far as their product segments are concerned. The ones which have diversified funding profile, which are carrying heavy capital on the balance sheet and largely been positive on PSU financiers.
No, sure. Just to take forward that point, your biggest worry with the sector right now is the asset quality, right? But if I'm just, and I know I'm taking a very myopic view, but I'm looking at the stocks which are reacting today, Shriram Finance or Chola, both are vehicle financiers per se, PNB Housing, L&T Finance, again, to a large extent, the secured book is there. So what do you think is happening when it comes to vehicle financing and, home financing specifically?
Yes, so commercial vehicle finance has been under slight pressure. So if you even break that into certain sub-segments, so barring used vehicle financing and say smaller commercial vehicle financing, all other sub-segments are sort of lurching. So tractors have been under pressure for past 2 years. In fact, we might see slight recoveries in second half on tractor front, but again, that largely is dependent upon how the Rabi crop is panning out. And I think there is some green shoots there. If you look at passenger vehicle segments, we are also just lying in the high inflationary scenario. So the new vehicle demand has sort of lurched for past 1.5 years, while used vehicle demand has remained slightly better off. But then overall vehicle financing growth might be restricted to 14 to 15% for this particular fiscal.
Okay, so that's your view coming in, Shweta. I just want to connect the dots here with LAP, loan against property, and I want to join that with the real estate sector. Demand seems to be okay when it comes to the property front. You have a lot of these traditional NBFCs that are now also foraying into the LAP segment. Do you think foraying or diversifying operations is one of the solutions to get out of the slump that these companies are seeing?
Absolutely, I largely agree with you. So, be it financiers, even on the housing finance side or even on the vehicle finance, we are currently looking at business models which are largely diversified. So, talking in particular of the housing finance space, we like something like Bajaj Housing Finance model, which has a calibrated risk profile and diversified lending profile, which pans out across home loans, loan against property, developer loans. As you rightly pointed out, we are in up cycle as far as real estate cycle is concerned. So definitely positives coming on the real estate front. Just being focused on or being a single product agency is something not which will look positive both from the earnings as well as growth front for the entire space. So diversity or diversification is the key.
Diversification is the key, and that's what you're watching out for. Thanks, Shweta, for making time and speaking with us today. Appreciate
If you like this video, then like, share and subscribe to ET Now.